So this video deals with when should you issue an internal control letter. So in a standard audit under generally accepted auditing standards, if you run into a significant deficiency or a material weakness in internal controls, then you're required to issue a letter in writing to your client that communicates this significant deficiency or material weakness. So the question I got this morning was, but what if I don't have either one of those? Do I still have to issue this letter? And the answer is no. Now, what confuses many auditors is sometimes we're performing what's called a yellow book audit. And yes, we really do have a yellow book, and that yellow book's issued by the GAO. It's a separate set of standards. So if you're doing a yellow book engagement, then if you have a significant deficiency or material weakness, you're going to communicate that in your yellow book report. But let's go back to the question, what if we don't have either one of those? Well, if you don't have either one of those, you still have to issue a yellow book report. Now, and I want to show you what that looks like. So this would be a yellow book report when you don't have a significant deficiency or a material weakness. So in this letter, that first section talks about internal controls, and it starts out by defining a deficiency in internal controls, a material weakness, and then a significant deficiency. And then it goes on to say, our consideration of internal controls for the limited purpose described in the first paragraph, and you'll see that up here. And then it says, and was not designed to identify all deficiencies in internal control that might be material weakness or significant deficiency. And then it goes on to say we did not identify any deficiencies in internal control that we consider to be material weaknesses. And so even though in this example we didn't have a significant deficiency or material weakness, we still are required to issue this yellow book report. And it goes on to say, hey, there could have been some material weaknesses or significant deficiencies. We just didn't identify those. So this is what I call the standard yellow book report when you don't have a significant deficiency or a material weakness. Now, let me just add that this report goes on and talks about compliance issues. And in this report, this example says there were no instances of non-compliance. This is the standard yellow book report when you don't have any compliance issues or internal control problems. Now, one other thing I want you to be aware of, when you issue the yellow book report, you need to add some additional language in your audit opinion. And I see a lot of people make mistakes here, so let me highlight what that additional language might be. So in the basis for opinion, we say we conducted our audits in accordance with auditing standards generally accepted in the U.S. Then you need to add this language and the standards, and I won't read all of that, but you can see it. You need to add that additional language to your audit opinion. There's a couple of other places where you need to add this additional language, and those would be here, and then also here. And then the last thing you need to make sure you do is add this additional paragraph. This paragraph is really just referencing the yellow book report that goes behind the notes to the financial statements. That way, when a financial statement reader looks at your opinion, you're kind of waving your hand saying, hey, this was also an audit conducted in accordance with the Yellow Book. Now, that's also sometimes referred to as in accordance with Government Auditing Standards. It means the same thing. So this paragraph would be added to the standard audit report. So let's go back to where we started and we'll put a bow on this and be done. But if you perform an audit and it's not a Yellow Book audit, in other words, you're not using the Government Auditing Standards, this guidance, and if you don't have a significant deficiency or a material weakness, then there's no internal control letter to be issued. There's nothing in writing to be given to anybody. But if you do perform the audit in accordance with this guidance, then yes, you must issue a Yellow Book report. You'll put that behind the notes to the financials. Then you're going to add this additional language in your audit opinion, and that makes the reader aware of the fact that, yes, this is also subject to Yellow Book. So if there are Yellow Book findings like significant deficiencies, material weaknesses, or noncompliance, then when the reader looks at that audit opinion and that last paragraph says, hey, see the Yellow Book report also, they'll go back there hopefully, and then they would see the communication about the problem areas that occurred. Now, in this video, we're talking about when there's no issues at all. And so the reports that I showed you, the Yellow Book report as well as the audit opinion, that would be appropriate when there are no issues. So I hope that clarifies. This is kind of confusing, but I hope that clarifies the reporting requirements when you don't have significant deficiencies or material weaknesses. I'll see you in the next video. Thanks and have a great day. Bye now.